It'll be great to get an comment from Khoon Goh. He's head of Asia Research at ANZ Research. He joins us right now to talk about that and more. Khoon, thanks so much for joining in. Good morning to you as well. BOJ spurred some bit of appetite in the bulls this morning across the Asian landscape, though US markets didn't end too badly either. What's your sense of what happens to risk assets in the near term until the Fed meeting is out of the way?
Good morning to you. I think the Bank of Japan has clearly come out to try and calm markets. It has worked so far, but I think the Bank of Japan still has a lot of work to do because, in my mind, they are behind the curve. I mean, Japan has finally defeated deflation after 3 or 4 decades. Policy rates, even after the recent move at 25 basis points, is still well below where it should be, given that inflation in Japan is over 2.5%. But they have to tread very carefully, and we've seen the carnage in markets that occurred when they outlined their path to normalization. Of course, they have to tread carefully, but I think it will be a mistake for them to completely abandon their normalization path just because we got some turmoil in markets.
Khoon, hi, it's also Samina joining in. Do you feel like it might be a good time to invest in risk-off assets for the near to medium term? I'm talking about gold, I'm talking about silver, I'm talking about debt.
I think you have to distinguish between what's happening with the unwinding of the yen carry trade with what's happening on the real economy, particularly in the US. Because there are several factors that have intertwined together which triggered this sell-off. The unwinding of the yen carry trade is tied to the BOJ normalization, the recession concerns after last Friday's payrolls number, and the geopolitical concerns, as you mentioned earlier, about the potential retaliation. Now, in terms of the US economy, I think that's still really important in terms of whether or not we're going to see a risk appetite continue to be sustained. Now, my view is that the US economy is not going to go into recession. I think one data point is not indicative of that. And I'm still on the camp of a soft landing in the US. So if that starts to play out, then we could start to see risk appetite return. I think we'll see markets pare back the aggressive rate cut expectations from the Fed. And I think, we'll see, I guess, an ongoing calmness return to markets. I think for the geopolitical front, I think we'll just have to wait and see what happens. But I think as of now, it looks like the worst concerns have been allayed. There might be some retaliation, but nothing major that will trigger an all-out war in the region.
Right. Khoon, also one question, taking a cue from what you said. There were some reports that I came across which said that the Fed will now have to tread carefully and not come down too heavily with aggressive rate cuts, because that would make the unwinding of the Japanese carry trade far worse. Do you feel like while the economy may need aggressive rate cuts, the equity markets may not be too pleased in context of what's happening on the Japanese currency carry trade unwind, potentially meaning that there could be delay or lesser or fewer rate cuts over the course of the next 6 to 8 months, which stock markets may or may not like?
Yeah, so for the Fed, they definitely have to tread carefully. But ultimately, the Fed's decision will be based on where they see the trajectory for inflation and the real economy in the US. They will take into account what's happening in financial markets, but they're not going to be bullied into adjusting policy rates just because we see some financial market turmoil. Now, as again, my view is the US economy is still in reasonable shape. And if indeed we are heading for only a soft landing and no recession, then the Fed can take measured easings, nothing aggressive, 25 basis point steps starting from September. And ultimately for markets, I think that should be taken as a positive step, because if there are no recession fears, then I think we'll see calmness return and so investors starting to dip their toes back into risk assets.
Hi, Tamanna here. Just to get a sense of how all of this plays out for emerging markets, and And also at the end of the day, the biggest question I think our viewers right now want to know is whether the worst of the impact we saw because of Bank of Japan's actions is over. Are these statements enough to calm the storm for now?
Look, I believe that the carry trade unwind is not completely over.
Okay.
But I would say that the worst of the turmoil as a result of the yen carry trade unwind is probably past us. I think we've moved past the panic and liquidation mode of it. But there's further unwinding to go because the yen carry trade built up over a long period of time. So you can't expect a complete unwind in just a few trading sessions. Having said that, I think the further unwinding should be a lot more orderly. And this will, as long as markets are calm, that will allow investors to continue to pare back their positions and unwind leverage without causing excessive volatility. I think the other thing we have to also bear in mind, particularly for emerging markets and in this particular case for India, the yen carry trade involves two parties. One is using yen as a funding currency. The question is, what do they use the leverage to invest in? And in this case, in terms of the yen carry trade, and INR has actually been a favorite longs amongst investors. I think that's why you've seen the Indian rupee significantly underperform. That's why the rupee had been hitting all-time lows, because part of the yen carry trade unwind actually has hit the rupee as well, because funds that were long Indian assets, particularly long the rupee for the carry, were being forced to unwind those positions, which is why you've seen the rupee pretty much among the only Asian currency to weaken amidst the turmoil that we've seen so far this week.
Okay, wait, let me just, I don't know if I got that correctly. You're saying that India is relatively more stable among the Asian markets in terms of the turmoil we saw this week. Did I get that correctly, Khoon?
Now, I'm saying that the rupee had been hit because of the unwinding of the yen carry trade. That's why the rupee had weakened to all-time lows.
Yeah.
So the rupee had not been immune to it. In fact, it had been, I would say, partly a casualty to the yen carry trade unwind.
Thank you so much for speaking with us today. Khoon Goh there, Head of Asia Research at ANZ.